Hello, I'm Ted Seides, and this is Investment Management Operations. This show explores the inner workings of the most sophisticated institutions in the industry. Through conversations with executives across operations, compliance, legal, and finance, you'll hear how key operating partners run their businesses in an ever-changing and complex investment landscape. You can join our mailing list and access Capital Allocators content at capitalallocators.com.
I'm Scott McDonald, and I'm your host. My guest on today's show is Emi Larson. Emi is the COO of UCLA's endowment. Emi shares what it's like going from an ops role at an emerging market manager to a hedge fund of funds, and how it led to a COO role at a well-known university. We cover how to make that leap from director of operations to the COO seat and the key skills needed for that position. We tackle how nonprofits keep up with growing business complexity, the challenges with West Coast hiring, and how overbuilding select parts of your tech stack can help you scale. I would like to note that we recorded this conversation not long before the fires engulfed Los Angeles. With UCLA being in the heart of LA, our hearts are with the folks out there. If you want to help out, we've dropped a link to donate to the LAFD Foundation in the show notes. And with that, please enjoy my conversation with Emi Larson. Emi, it's great to be with you today. How did you get started in the industry?
My career in asset management started at a small investment firm back in New York. It was specialized in emerging and the frontier markets. Old Square Capital is what I would call today an emerging manager. We were a small team, and the environment was very much like that of a startup. So it was an incredible experience for me. I had a front row seat from day one or on all aspects of the asset management business, from fundraising and marketing to manager and investor due diligence, ongoing monitoring, the critical aspects of the back office, reconciliations, transactions, processing. And on top of that, I got to see what are the requirements of running a business. So from a learning perspective, it was a great experience. But I would add that from a personal perspective, my start in this industry and the reason why in some way I got attached to it, I was born and raised in Romania. And back then, Romania was considered a frontier market. I think it's just recently that they've been upgraded to an emerging economy. And coincidentally, shortly before I joined Old Square, they had invested with a London-based Romanian GP. And a lot of the underlying portfolio companies were companies that I was familiar with, having lived there. And I remember reading through the manager's materials and recognizing those names and thinking that in some ways, for multiple degrees of separations, it felt like I was contributing to the local economy of my home country. And it just added purpose to the daily grit. And I did not appreciate that feeling at the time. I definitely acknowledged it. I didn't realize how important it was until later on in my career. And I do think it is part of the reason why I'm in this seat today, working for the organization that I work for. That was my start. I left Old Square after 5 years, started with Barlow. The work felt like a continuation of my journey at Old Square, except that the environment was very different. This was an established shop, different strategy, long-short equity, fund of hedge funds. When I joined Barlow as a registered investment advisor, I was managing over $2 billion of institutional capital, full team, robust operational infrastructure. So that was the place where I solidified my skill set and broadened my knowledge in terms of operations and business management. I was with Barlow for 7 years. And at the end of that journey, that feeling of purpose came back again. I just decided to pivot to the allocator space. I was fortunate enough to join Sloan Foundation. Their investment office was looking for someone to manage the operations. And I knew that I was leaving a lot of the things that I was capable of doing that I wanted to continue. I was leaving it behind, and I was focusing solely on investment operations. But I was so interested to get into the nonprofit side of things that I just jumped at the opportunity.
Tell us a little bit about Alfred P. Sloan.
It is a 501c3. Its main focus is supporting research and education in STEM-related fields.
So going from being the hedge fund of funds and going to the allocator side, what was the biggest aha for you making that shift from one side of the table to the other?
The biggest shift was understanding that things can wait until tomorrow. A cultural shift for sure.
What's an example of that?
If your boss asks for something, you don't have to stay until 10 o'clock at night to deliver it. They will appreciate it just as much if you give it to them the next day. In the beginning, I had a hard time adjusting to that because the faster you deliver something to your boss, you think that the better you are at it. It's kind of like you're solidifying your worth. But sometimes taking your time and being thoughtful and thinking about it can actually deliver something even better. So the culture shift was different.
Were your responsibilities at Sloan different as well?
My responsibilities were different in the sense that they were more reduced. It's just very methodical and very repetitive, monitoring the portfolio, reporting to the foundation on a monthly basis, executing on our investments. I would say the work was interesting in the sense that the investment strategy was different. This was a long-only strategy. Our focus was maintaining the corpus in perpetuity and grow it. Asset allocation was different. The risk management, the approach of the team was different. So that was a learning opportunity for me. In terms of my day-to-day job, I started focusing more on operational due diligence and trying to streamline and make the operations more effective. We were a small team. There were 5 of us. I was the only person in ops. I was leveraging some of the investment analysts on some functions, but at the end of the day, everything was on one person. But overall, it was just a great experience. Learned a lot about the nonprofits.
Where did it take you from there?
It is a long story, but I'll try and make it short. So I was catching up with a friend of mine, Justin Bardeen, who at the time was recently appointed as the CIO of UCLA Investment Company. And Justin and I go way back. We were actually co-workers at Old Square. We were both analysts. He was on the investment side. I was in ops. He was quite a few years ahead of me in terms of skill and professional experience. So at the beginning of my journey at Old Square, I actually saw Justin as my mentor. He taught me a lot of the things that I know today. It's a very close-knit environment. We worked very closely with each other, and I've gotten to know and trust Justin as a coworker and as a person, and I've always held them in high regard. So we kept in touch throughout our careers. And he casually mentioned that he's looking for someone to lead his operations. I didn't think much of it at the time, but like with any seed that you plant, it just grows roots. And I realized that this was an opportunity for me to continue doing what I love doing, which is working for an investment advisor, but in a nonprofit environment. So after a couple of months, I put my name in the hat. I flew to LA. I met the team, interviewed with everyone. I really fell in love with the mission. I love everyone there, group of very smart and passionate and dedicated people. And the job in itself, it's exactly as I had imagined it. UCLA Investment Company is structured and operates as an investment advisor, but for the sole benefit of UCLA. The moment I interviewed for it, I knew that I wanted the job. Thankfully, it was mutual. And after several months, I made the decision to move to California.
As a New Yorker, how was that decision made? I'm just curious because that's a big change on a number of different levels.
It was definitely a big change and a very sudden. And I definitely learned that in life, you should never say never. New York was the holy grail for me, especially in terms of my career. And after interviewing for this role and doing some deep soul searching and thinking, I realized that distance should not stay in the way of an opportunity, and stepping out of your comfort zone, trying something new. That unfamiliarity doesn't mean that it's bad. It just means that you're growing and you're trying something else out. And I thought that New York is always going to be there, but this opportunity will not. So I decided to take the risk, and I do not regret it. It was probably one of the best decisions that I've made. what ended up being interesting was that we moved in the middle of COVID. So my day one at UCLA was 100% remote. So that was a challenge in itself because I was moving up in my professional career. My role was very broad, director of operations. This is a completely different situation. When the CIO decided to recruit, I think at the time he thought that director of operations would be better suited for the role. But there was a clear understanding that this role would eventually, as the endowment grows, as the complexity grows, it will lead to a chief operating officer position.
I want to talk about this a little bit. There are a lot of people who are in that director of ops role who their goal on the career path is to actually be in the COO seat. Can you talk to the transition that you made and what the biggest differences are in learning curve, those types of elements of making that shift?
First of all, it really depends on the organization. So I'll put that out there because a director of operations at UCLA is completely different than a director of operation at some other peers or even a foundation. We all have the same missions and the same objectives, but we operate very differently from each other. And that goes for our roles and responsibilities. For me personally, what I realized was that as the director of operations, you're still very much boots on the ground and very involved in the day-to-day. And as a COO, you have to not necessarily detach yourself, but have a higher seat and start thinking about things differently. So you have to let go of the control that you have as a director of operations. And particularly for me, having been trained in an environment where we're a small team and we could directly impact the outcome, it was very hard to just let go of that and trust others to do it. But then I've learned that letting go of that control doesn't necessarily mean that it's a bad thing. It just means that I'm empowering the team that I manage to take over, and I'm creating that accountability for themselves, which in turn will foster, hopefully, this culture of trust and growth. So constantly shifting between the day-to-day and the strategic point of view, I think that was the biggest learning curve for me. Onboarding a new system, identifying an issue, you're not just fixing the problem that you have today in the present. You have to start thinking about the future. Okay, what I'm doing today, how is it impacting the team 1 year from now, 5 years from now? How is it impacting the organization? So you have a forward-looking thinking that I don't think you always have the luxury of having as a director of ops.
It's interesting because I think a lot of people struggle with taking more responsibility, being strategic and letting go and delegating, because a lot of people think of that delegation as almost some form of what I would call failure, but that's actually progression. I don't know what your experience is there.
I totally agree. And I did struggle with that. It's exactly like you said, you let go of the things that you know you do well, and you kind of left uncovered. Like, what do I do now? If I'm not doing that thing that I excelled at and I can doing so great, then how am I going to excel? So in a way, it puts you in a position of growth. You have to figure it out, how to expand your knowledge set, how to do better. But I think it's very organic. If you're passionate about what you do, passionate about the mission, the organization, if you love managing people, this comes naturally to you. But yes, in the beginning, the transition is a little bit rough.
I'd love to hear a little bit more about UCLA and just a snapshot on the organization.
So UCLA Investment Company is the advisor to UCLA Foundation, which owns the assets. Our mission is pretty simple. We're supporting UCLA community and its values. And from an investment perspective, we're not very different than other endowments. Our objective is to generate that return that is sufficient enough to maintain the value of the endowment in real terms over the long term after the cost of inflation and the payout. Our team consists of 15 professionals. There's 10 of us in investments and 5 in operations. And I would say that our overall infrastructure is such that we operate as an investment advisor. We're a nonprofit or 501c3, but the way we structured our functions and the way we structured the entity, there's no difference between us and an advisor, which means we manage our own HR, our own technology, office leasing. We have a compliance program that follows the guidelines of the Advisors Act. We do our own finance and tax reporting on top of managing the endowment operations or the investment operations. And we did all this because our objective from an operational perspective is really just excellence and the highest standards of conduct of care for the assets that we were entrusted to manage. When I look at our tech stack relative to other peers, you could say that is lean, but we like to think that it is efficient. We are very thoughtful about where we allocate our resources and who we partner with. We prefer to partner with institutional level companies that offer us some strategic opportunities, synergies down the road. So if I were to go over our critical functions, each of them is supported by an institutional level software or service.
And then what's your level with the board reporting? Do you have direct involvement with the board?
I participate in all of the board meetings, and each quarter we give a detailed presentation of our portfolio, but part of that presentation is also an administrative update. So my responsibility is to present to our stakeholders any updates that have happened within the firm or with the team for the previous quarters, changes that we made, some that we onboarded, strategic things that we're looking at.
Is there anything on top of the board members' mind these days that's worth noting?
I would say AI. It's now a recent hot topic from an operational perspective. Obviously, the long-term objective of the endowment and how the investments are doing. It's something that is consistent, but once in a while, there are certain topics that are surfacing. And one of the things that we are actually going to focus on is the use of AI and how we can leverage that on the investment side, but also on the operations.
And then what about board reporting? So one seems like something that all of your peers struggle with every quarter. Is there any progression? Will AI play a role with that? Or is there some other tools that may come in the market to make that process of aggregating data and information in a digital format a little bit user-friendly for investment committees?
We don't use a data aggregator to get the underlying portfolio holdings. That is something that we update in-house manually, and I know it does take some time. So we have been looking at ways to hopefully streamline that. Ideally, use a solution that scrapes the data from all the documentation that we're receiving from the managers and then just lift that manual process of entering the data and really only focusing on quality check. In terms of aggregating and automating the entire reporting, I don't think we're there yet. And we have certain parts of our deck that are consistent quarter on quarter. And we were able to leverage existing tools to automate that output. But a lot of our board interaction topics being discussed change quarter on quarter. So there's not really an opportunity to opt there. But I would say that the biggest challenge is updating the quarterly portfolio company data.
And then maybe just give a snapshot of your areas of responsibilities as COO, because every COO is unique, and just be curious of what that snapshot looks like.
So my day-to-day responsibilities just cover the operations of the management company, right? So it could be anything from HR to compliance to technology and just running the office. I also oversee the investment operations for the endowment, the communication with our stakeholders. And on top of that, I am responsible for the operational due diligence for the managers in our portfolio. Overarching that is working closely with the CIO on the execution of our strategic objectives and just ensuring best execution on day-to-day functions.
Let's talk a little bit about ODD and just your philosophy and process, and love to get some insight there.
We implemented an ODD framework several years ago. And my approach from day one was very process oriented and very structured, because to identify risk, you need to be very organized and you need to have a process in place. And what was interesting to me as part of that work is realizing that you can't be 100% structured and process oriented. You have to have a certain degree of flexibility. And my training in ODD started at Barlow, where there was a single strategy and there was a certain type of managers that we were interacting with. So it was very siloed. You were able to have a structured approach. What I underestimated in a way was with an endowment portfolio, you have different asset classes, different types of managers at different stages in their business cycle. It's not one size fits all when it comes to analyzing the risk. So what we ended up doing is splitting the ODD program and having two approaches. The structured approach really relates to the data intake and risk identification process. So we follow a rigorous process when it comes to getting all the information that we need. We request the same documents from all the managers. We meet with them. We interview their service providers, irrespective of what asset class you have or whether it's an emerging or established manager. We do the same things. We run the same background checks. We look at the same areas of the business, the same silos. But then when it comes to the risk identification and analyzing the impact and the likelihood of those risks, that's where I am becoming a lot more flexible. And I guess I would call it becomes a risk-based approach. It's very difficult to quantify operational risk when all of your inputs are qualitative. I guess one could use a combination of likelihood and impact and assign some values. And yes, you will come up with some numbers that you can then communicate to your investment team. But what are those numbers actually communicating? Communicating that risk to the investment team was also part of the reason why I realized that how you identify those risks has to be very fluid. So after the data intake, I am comparing each manager to a benchmark of industry best practices and expectations. And it's almost like you can think of it as a performance review. And we're determining, does this manager meet industry best practices in our opinion? Does it fall below or does it exceed it? And within that analysis, if it falls below best practices, okay, what are the risks that would have the biggest impact should anything go wrong? And how do we mitigate that? And that's where the conversations with the managers and the conversations with the investment team start. And there's a lot of brainstorming and what I call the qualitative risk-based approach to ODD.
And so do you compare an emerging manager to another emerging manager versus somebody who's very mature when you think about that best practice?
The original thought was comparing it. It's pretty obvious you cannot compare an established hedge fund manager to an early stage venture capital. They're just two completely different businesses with different sets of requirements, even though there is overlap in terms of the types of risk that they can expose our portfolio to. But later on, I realized that I can't even compare two managers within the same asset class. So I steer away from comparing manager to manager. I'd rather compare each individual manager against a set of industry best practices. I've also learned that you have two identical managers. Let's say they both raise a fund two. One has a solid practice around valuation and pricing, but they're not doing that great in compliance. And the other manager, which is raising the same two funds and might have an identical team, is not doing that great in terms of valuation, but has a solid compliance. So I guess you could compare it, but you can't. You really have to look at each manager individually.
So we're now, I'll call it 20 years in on people having a robust ODD process. Is there something that people tend to overlook? Or is there any area that you kind of look at this and say, this is surprising to me, or something along those lines?
I often see managers who are overlooking the importance of operations. I'll get answers like, there's not a lot of activity right now. We don't have any distributions. We don't plan on making a lot of investments. There's not a lot going on. So we don't need a CFO in-house. And that to me is a very short-sighted answer. You need to have a CFO in-house. Having that talent in-house doesn't necessarily mean that you're hiring them to take care of your day-to-day. You're hiring them to advise you on how to grow your business, because that's why we're investing with you. We're expecting this to be a long-term partnership. You're not hiring someone just to take care of your quarterly reporting on any given time. So the same goes for compliance. I see managers that underestimate the impact of an SEC examination. Even the simplest examination can yield a deficiency letter that might bother an investor. It will affect your fundraise. It will cause additional headaches. It will be a distraction for you and your team. It might create additional legal fees they don't necessarily want to incur. So those are the things that even today, after being in this business for a while, I still see them happening. And I think the reason they still happen is because the GPs are focused on the investment side and they haven't had much exposure to the back office, to how the operations are run. So I don't think it's coming from a bad place. It's just short-sighted. And that is why you need someone like the CFO who better educate on the importance of the operations.
It's interesting. I always tell people that ODD is the best form of free consulting that you can receive as a GP. And I'm curious as to when you identify an issue that you will then need to go to the investment team, and how does that feedback loop go back to the manager to end up in a good spot for both parties?
I like to involve the investment team early on in a process, especially if I notice things that could create not necessarily problems, but if anything, as much as a yellow flag, I will communicate that to the investment team. I don't want to surprise them at the last minute. And once we identify something, we start by having communications in-house, looking at that holistic perspective. What could happen if we ignore this particular risk? Or what is it that we're trying to achieve? Can the manager do this? Do they need to do it now? Are we asking them to commit to doing it in the future? So before we even engage the manager, we are very thoughtful about what it is that we have a problem with, what are the repercussions of that problem, and how do we solve it? How do we mitigate it? And once we establish that, then we move on to the manager and we try and realize, like, okay, can the manager do this? Do they need to do it now? How do we communicate this to them? There are times when the investment director will reach out to the manager and have a conversation with them. But most often than not, I'm also included in those meetings. And really, we are here to get to know each other and to understand your business and to get comfort with the way you're running the business, the way you are going to run the business, let's say for the next 10 years, especially in private investments. This is not coming from a place where we're telling you what you're doing wrong. We're just telling you what you could do better and what would help us get more comfort with that initial assessment. And 99% of the managers are very receptive to that feedback. They do appreciate the candor. They appreciate the opportunity to resolve the issues at the onset. And I think that sets a very important tone for the rest of the relationship with that particular manager.
And how important is that reaction to that conversation to you personally as the person running ODD?
It's very important. It's interesting. I mean, most of the time, ODD process is very straightforward, very smooth. But once in a while, there's these thorns that come out. And I'm thinking, I'm so grateful that this process exists, because we wouldn't have been able to identify this side of the manager had we not gone through this process. So 99% of the time, everyone is very happy to have this conversation, positive reaction. But I have seen cases where the managers did not appreciate it or just sent this message that they don't have the time to deal with that right now. That's just not the right attitude.
What about ongoing diligence? So you're in with a manager, and how do you stay up to speed? And do you think differently about liquid strategies versus illiquid strategies?
There's definitely a significant difference between, in terms of the ongoing diligence, liquid versus private. With the private investments, there is growth, but it's not as material, especially when I'm thinking of the operational growth. We see changes, but they typically happen when the GP is out fundraising, adding additional products to their platform. So it's almost like around that time, you can actually see the changes from a business perspective. And it's a prompt for us to reevaluate. With the liquid strategies, there is an ongoing operational risk. I make an effort to meet with the managers at least once a year. We are looking at the materials that are being sent from them. Our investment directors are always in open communication with us. Their ongoing monitoring is a lot more frequent than it is for us on ODD. So we work as a team, and whenever they have their quarterly check-in, they will always have a check-in on the business side as well. Any changes that happen are communicated to us. But I would say, yes, there is a more heightened sense on the public equity side compared to the private.
How do you keep up with all the things you need to worry about, given you're a fairly lean organization with a good-sized capital base?
We are mindful that just like with the investment objective, the long-term objective, things are growing, but not at a fast rate. And it's the same on operations. We anticipate growth, but it's not going to happen overnight. So we have some time to anticipate and prepare for it. And at the AUM that we are today, we're a mid-size endowment. We are relatively young, but we are recognizing that growth is coming, and we are more mindful about the changes that we're implementing in our infrastructure. It just goes back to what I said earlier. We're not just fixing for the problems that we have today, but we're now thinking of the future. When we were looking for a new general ledger to support our accounting books and records, we chose to move forward with pretty sophisticated institutional level tool, which in some ways might be more than we need today. But the idea was that we want to have that ability to scale, to add complexity, and we want to be prepared. So that's one way in which we are thoughtful about how we expand. And nowadays, especially with AI, there are so many offerings out there that give you that opportunity to address the complexity of your business and save some of the time that your team is spending on manual processes. But it's not always the best fit. And I think it's a struggle for us because we recognize the opportunity to onboard those tools. But from a practical perspective, they don't always make sense. It was just a few months ago that I was talking with a firm that had this product that used AI to aggregate all of your legal agreements in one place and extract the important data points. And conceptually, that's an amazing tool for the legal due diligence process. And it saves you a lot of time to just constantly go back and see what you've done with previous managers. And especially in the negotiation process, it's so important to see how the rest of your portfolio is doing. But from a practical perspective for us, it doesn't, because we outsource the legal due diligence process to our outside counsel. I mean, we manage the process, we're responsible for it, but the hands-on work is done by the counsel. So this tool would be perfect for them. I know there's other endowments that have an in-house counsel. So in their use case, this tool would be amazing. So there's trying to solve for that complexity. I know there are tools, but it's not always a one-to-one match. So we're still looking document intake and data scraping. It's another area where we see opportunity to solve for some of that complexity. But like I said, we're not 100% set on which one is the best for our business.
Let's say you're looking for a certain piece of tech and you talk to your peer group and all different sizes. How do you know what's good advice for you?
It's interesting when we talk to our boards, occasionally we get questions like, well, what are other people doing? So there's definitely this sense of we want to do the best that we can, but we also want to not do it very differently than the rest of our peer group. So maintaining those connections and talking to my peers is very important for many, many reasons. References and understanding how to use systems is obviously one of those reasons. And it just became very clear to me that it's really important to first understand their use case. So I think in the very beginning, I would just take their success story at face value. And I would think, well, it really worked out for endowment A, B, and C. So let's go with it. It's going to be great for us too. And that was not the best way to look at it, because I also learned that we all have different use cases. We do things differently. At UCLA, we do a lot of the things in-house. A lot of our peers are relying on their custodian doing the accounting and investment books of records. So the way they do things is different than us. The levels of controls and checks and balances are different from one organization to the other. The size of the team, the tools they're using, the budget, the culture at the top. And we are now going through this process of identifying the right tool for us to automate the document intake and data scraping. And I spoke to 12 institutions that use this kind of tool. And I realized that there's always two camps. There's a camp that has a success story and the one that doesn't. And what determines where you fall in is your expectations. And again, those expectations are very much related to your use case. So if I'm expecting a document to come in within 24 hours, that's my expectation. It's going to determine how happy I am with the system. I think it's crucial whenever you check for a reference to understand how that institution uses that particular piece of software.
If I recall correctly, you started in the industry as an intern.
Yes.
And then grow and develop along the way. And then how do you think about hiring people for your team?
That's a very good question. Our team went through some changes and there were opportunities to add new members to the team. And it's about that strategic mindset. What am I trying to solve here? Am I trying to add a body to enter the accounting data into our GL system? Or am I trying to add someone that through their presence is going to contribute to the culture of our team, is going to add to the organization, is hopefully going to grow and love this group and then become the next COO? I could potentially bring in the person that will replace me, right? It is my responsibility to bring the talent and train them and get the best value that I can to the organization. So in finding the right people, it's not just the technical skill. There's a lot about soft skill. There's a lot about culture match. So understanding the person and taking a lot of time to get comfort with that is something that is important to me. I think it's very important as a COO, as a manager, director. It doesn't really matter. But when you lead a team and you're adding to that team, it's very important to give a voice to the rest of the team members. So I was very thoughtful about including the entire team in the recruiting process whenever we had to add someone. I listened and valued their feedback. Even before we decided to bring someone in, just in the screening process, it was important to hear different views and different perspectives. Even though it was my ultimate responsibility, hiring process is really a group decision because at the end of the day, we are a small group. We are working very closely together. So it's not just me. It's not just my opinion.
Do you think we overlooked the importance of fit for a long time?
Absolutely. I think at times we are so focused on the task at hand and we get so wrapped up in our heads that we forget that how we feel walking into that office every day, it's really going to determine your productivity and your level of excitement and your growth. If you're not happy with your job, if you're not happy being part of that group, it's going to show and it's going to affect other people. And I think the culture fit is crucial. At UCLA, our culture is very important. We work very closely together. There is always cross-collaboration between the investment and the operations team. We're very separate in terms of the functions that we perform because we need to have those strict checks and balances and the strict separation. But in terms of how we work together, there's an open door policy. A junior person can always walk into a director's office and ask a specific question.
Well, Emi, this has been really insightful and loved hearing the story and how you got there and your evolution at the organization. And I'd love to end with two questions that we tend to ask people. And one is, what advice would you give an emerging manager from an operational perspective?
Very important to not skip on having talented people in your operation team, even if just one person have that perspective that a professional is going to help you grow and scale your business, not just fix the day-to-day. Don't skip on compliance. Don't underestimate what subpar compliance program can do to your business. And from my experience in working on the manager side, I think it's so important to hire people that align with your mission and that are exceptional in what they do and they are passionate about the business that you're trying to run, because those are the people that are going to help you scale and become successful. But they're also the people that are going to be there with you when the times are tough and they're not going to jump ship.
The other question I like to ask people is, what is the one industry resource you most commonly refer to people?
I wish I had the perfect answer and just refer them to a book. There's just so many things out there. For someone that is at the beginning of their career, I would say network as much as you can and learn from people who have done this for a while. Everyone is happy to talk about themselves and what they do. They're happy to share. And also look at industry resources like ILPA, EMA, MFA. Everyone has really good case studies, really good resources. Just be open-minded and research as much as you can. You can never know enough. Even I continue to learn, and I have so much more to learn.
Emi, thanks for the time and look forward to staying in touch.
Thank you. This was my pleasure, and thank you so much for having me.
Thanks for listening to the show. If you like what you heard, hop on our website at capitalallocators.com, where you can access past shows, join our mailing list, and sign up for premium content. Have a good one, and see you next time.